the world and in India. So they know the best. It's not a message, but I would like to say that I think India today deserves a much more serious look because of all that is happening in India. The interest this time around in India is genuine. There's a lot of international confidence on India, on the Indian growth story, on the technology story built around India, and on the growth prospects of India, the stability that is the macroeconomic and financial sector stability that India offers. So my message, if you say it in that sense, is that I think we need to really sort of step back and look at the business opportunities in India, because this is the really right time to get into the Indian business ecosystem.
Coming back to that point in terms of the India growth story, how do you see India's growth with global inflation also rising? How do you see that panning out in the next 5 years, 10 years? As a matter of fact, if you can be a futurist here right now.
You see, the future prospects of India's growth are very robust. Just imagine last 3 years, including the current year, what was India's growth rate? After the contraction that we witnessed, about 5.8% contraction which we saw in 2021, the next 3 years growth was 9.1, 7.2, and current year the expected is 7.3. In fact, last year in October, contrary to our projection of 6.5% growth, which we had given in the previous monetary policy, when in an event in Mumbai, I said that I expect, and I will not be surprised if the growth, current year growth is 7%. There's a lot of cynicism around that, how RBI is, perhaps RBI was being over optimistic at that time in end October and early November, when I said 7%. But subsequently, the National Statistical Office has come out with a figure of 7.3%. Growth prospects are very good because I think thanks to the structural reforms which have been undertaken in the recent years, structural reforms in matters of taxation, in matters of banking, in matters of, let us say, giving a new fillip to the manufacturing sector, in particularly in sort of making a vast difference in the ease of doing business in India. So considering the structural reforms which have been done and the macroeconomic and the financial stability which we as a central bank have been able to provide during the years of multiple overlapping shocks, crisis, unprecedented, you had a health crisis, COVID, then you had a geopolitical crisis, Ukraine war, then war is still continuing, new flashpoints in the global geopolitics are coming up. Despite that, the Indian banking sector has made a remarkable recovery, and I think the Indian banking sector is perhaps at one of its best in recent years. The financial sector is very stable. The external sector is also stable, notwithstanding that the global growth is slowing down. India's services sectors are doing well, and these are not one-off developments. These are not temporary developments which are happening because of the structural reform measures that we have. For example, look at the regulatory architecture of the financial sector. We have given a lot of focus. We, as a Reserve Bank of India, as a central bank, the entire, the governance system in the banks is today completely, there's a new financial architecture we have put in place with regard to governance of both private and public sector banks. The regulatory architecture around the NBFC, that is the non-bank finance companies, the regulatory architecture around the digital lending, we issued digital lending guidelines. So I think all these are the building blocks, and they're providing the required foundations for the belief in the fact that India's growth momentum will be maintained in the future years. And when I say that, I see durable signs of India's growth momentum being maintained. It's not a one-off comment. It is based on a lot of in-house research and analysis.
That was a comprehensive answer, sir. In fact, Sir, as you mentioned in your answer itself, I'll pick up on that. We live in a very volatile, uncertain, very complex and an ambiguous world. What are the primary risks that you, as an RBI, as an institution rather, are you overseeing on a very critical lens, from a very critical lens? What are the kind of risks that right now you are foreseeing that will play out and might impact the Indian growth story?
You see, from the external side, I mean, the headwinds emanating from the external sector, that is from outside the country, the geopolitics, the geoeconomic fragmentation, their impact on the global supply chains, which have not yet normalized. And as I just mentioned a little while ago, that new flashpoints in global geopolitics are coming up and putting further restrictions on supply chains. There are new restrictions being put by many countries, by some countries, let me say it this way, on flow of capital, on flow of technology, and on flow of goods and services. So therefore, this geoeconomic fragmentation, what shape it will take again is linked to the emerging geopolitical scenario. Then the financial conditions, which we see in the advanced countries, notwithstanding the fact that this time around, the global economy, 1 year ago or 2 years ago, everybody thought that there will be a hard landing in all the advanced economies. It has not happened. Countries this time have responded to the challenges and far better. So hard landing is looking unlikely at this point of time. Individual economies have done and responded far better to the global crisis, but the point remains that the global growth is slowing down. So therefore, from the external side, the geopolitical dynamics, how it is likely to play out, the slowing global growth, which will have impact on external demand for every country, and the geoeconomic fragmentation and supply chain issues still persisting. That is from the external sector, and the financial conditions, how they will evolve. Internally, so far as the financial sector and the macroeconomic scenario is concerned, we are very proactive in dealing with them. We supervise the entire financial sector, whether it is banks or it is non-banking finance companies or various segments of the financial sector which is regulated by us. Other than capital markets and the insurance sector, the rest of it is practically within the domain of the Reserve Bank. So we are monitoring it we have really substantially improved our supervision. I mean, I'm not going into what improvements we have brought about. It's already in public domain. And last week I have spoken about it at length, so I'm not going into that. But today we are, our emphasis and our focus of our supervision and our forward-looking approach in supervision is to identify a crisis, identify a risk, identify a possible risk before it actually materializes, and then take preemptive measures to prevent any risk build-up. There are examples of it, but I mean, because of time, absolutely so. So therefore, internally there will be a problem. But internally, let me mention one area about which we are, which is always on top of our agenda at the moment, is the dynamics of the food inflation, which is subject to again global supply chain issues, and also which is linked to unexpected weather events. So food inflation can be very volatile depending on some weather events. We saw it last year. There was heavy rains and floods, and then we had the vegetable prices going up, and that impacted the headline inflation. Now that is something which is not under our control, but we have to respond to it. So that is a matter which is on top of our table whenever we try to sort of analyze the situation.
So as far as I'll take a different tangent. In Davos, one of the line of thinking, or rather the buzz, is around emerging technologies. And you being from, you're heading an institution that is looking at the financial sector in India. So what's the future of cryptocurrencies in India?
Very bad.
It's quite clear as it gets.
No, in the sense, on a serious note, let me say, I have said it time and again, of course, I will not shape the policies for all times to come. But as far as I can see in the foreseeable future, the way cryptocurrency is evolving all over the world, it has huge risks. I think some people are celebrating it as the party has just begun. It began 4-5 years ago, then it collapsed. Now again the party has started, but there are huge risks, particularly for emerging market economies, for developing economies, because it can impact your financial stability, it can impact your currency stability and monetary system. It has issues of money laundering and this money laundering, terror financing and all that. And it has the potential of, it's a currency-like product. I have talked about it at length. So it is a currency-like product. So there are huge risks around it. There is no underlying. It's not a currency, first of all, but it has the potential to become a currency, in which event it can occupy a part of the, your payment system. People say that it is too far-fetched, but please take my words. It can happen. It can happen sooner than people are expecting, and it can impact your banking system. So therefore, there are various risks built around it. It has no underlying. Every asset, if you call it as an asset, every asset has a corresponding liability. Cryptocurrencies, whose liability it is, nobody knows. But having said that, let me say that the underlying technology, blockchain has many applications. They can be put to excellent use, and already it is being used. It is being used in the logistics companies, in the financial sector. Our CBDC, the central bank digital currency, the e-rupee, which we have launched. In fact, in the just two launches further down, you have the CBDC, central bank digital currency, launched by the Reserve Bank on a pilot. As a pilot at the moment, it's on display, it's under demonstration, along with the UPI. So we are using blockchain. So blockchain technology has got a lot of application. The technology needs to be capitalized. The application built around technology is, has got a lot of potential, and that needs to be capitalized, and that needs to be utilized. But cryptocurrency as a product is highly speculative, and my opinion is that, and the Reserve Bank's opinion is that, considering the big risks around it, I think countries like India should be very, very careful. I said it in one event in Mumbai last week that we should not have a situation like the tulip mania. We should not again have something called a crypto mania, creating the kind of crisis that the tulip crisis did. So I'll stop this.
I'll pick on the word UPI that you just mentioned. So UPI is something that has revolutionized, digital payment system, the ecosystem in India, and it's something that the Honorable Prime Minister has offered it towards the global south. The kind of record transactions India has seen is more than US and China put together. So what is the RBI doing in terms of promoting its adoption externally?
You see, UPI has been actually a game changer. It has now become the international, kind of an international model. And there is a lot of interest from many countries. We have signed MOUs with several countries, and I cannot mention their names. But we have signed, MOUs with several countries to sort of facilitate setting up of similar systems in their countries. Some countries we are also providing the required assistance to develop their own internal, UPI-like fast payment systems. And the idea is to sort of link up the fast payment system of India with the fast payment system of other countries. We have done it in the case of Singapore. The UPI of India and the Pay Now of Singapore. It's now linked. It's now linked on. So the transactions between the across the two countries can happen on a real-time basis. And similar exercise is already underway with many other countries. And it can be a game changer because cross-border payments can become that much more easier, cost-effective, and faster. So therefore, that is our endeavor. And after discussion with NPCI, the NPCI has set up a subsidiary which is specifically dedicated to take UPI international. It's called the NPCI International Limited. So that company is specifically focusing on taking UPI international. So there is a lot of enthusiasm built around UPI. In fact, some of the use cases, those who have traveled in India or those who are from India, today if you go to a small shop or a vegetable vendor or a roadside chai wala, that is a tea stall or something like that, they're all on UPI because it is so much easier and everybody has a QR code. And the two things which we have done in India is that we have made it interoperable across banks, irrespective of which bank you have your account, and person or the merchant to whom you are making payment, in which bank he has a bank account. There would be different banks, but it is interoperable across banks. So UPI has got complete interoperability within the financial system in India. That is the best use case that we have. And many new products also which we are launching from time to time. If any, like when you travel to India, you can, UPI One World product can be used. You can sort of create a UPI wallet and paying in dollars or pounds or whatever currency you have, and create that wallet, spend in India, and then on your return at the airport, you sort of exchange it and take back your foreign currency. So therefore, the ease of using UPI, its interoperability, and another thing which we have done is that we have streamlined the QR codes. Earlier, there would be, each merchant would have, number of multiple QR codes. Now there are just two QR codes. One is the UPI QR code, which is hugely popular. And then there is another QR code, which is the Bharat QR code. Bharat QR code that has been there, that is also there. So you will have only two QR codes, but mostly it is a single UPI, the UPI code which you have, the QR code, which is used by everybody. And now that has been made interoperable with our central bank digital currency, the e-rupee.
So as a matter of fact, I remember you took over when the IL&FS crisis actually was panning out, and by the end of your tenure, you would probably be the longest-serving governor of the RBI in several decades. What do you see as your single biggest achievement? It's been a crisis firefighting kind of a tenure, at least initially, and especially during COVID. What do you see as your biggest achievement during the years that you've been at the helm?
You see, I joined just about a couple of months, 2-3 months after the IL&FS crisis had happened. That happened around August, September of 2018, and I joined in December 2018. So already the financial market were in a kind of a major turmoil, crisis of confidence, activities in the market, financial markets had frozen. Then we had in 2020 the COVID crisis, then we had the Ukraine war and its fallout, then all these recent multiple shocks overriding. It's not my achievement, and I think I would like to put in that it's RBI's achievement, because I give whatever that we have done, I would like to give the credit to the entire team RBI, and I'm not saying it just because I'm speaking from a platform to sort of, it's not a cliche thing, I genuinely mean it. It's the achievement of the RBI, and I think the major achievement is to bring stability into the financials, in the financial sector. Stability in the financial sector, stability of the currency, stability in the what you call the external sector, and you are right, the confidence, the public confidence, the investor confidence. Not only investor confidence in India, but investor confidence outside. So I think bringing that stability to the financial sector, it has been the major achievement of the Reserve Bank of India in the last 5 years.
Did you claim that
it carries a lot of weight, and in one event which I was participating in Kochi last year, there were a lot of college students present. So one college student, a girl, she stood up and asked me, Governor, how does it feel? You signed the Indian currency. So how does it feel? Does it give you a sense of power? So I told her, look, It's not a sense of power, it's a sense of responsibility. It's a sense of responsibility because what does the governor say? That I promise to pay the bearer so much. When I say I promise to pay the bearer, the responsibility of the Reserve Bank is to maintain stability, the price stability. So the value of the rupee does not go down because of high inflation. So there is a commitment behind that, signature on behalf of the sovereign that we will give stability to the, we will ensure price stability with regard to inflation. So it's a huge responsibility. It's a huge responsibility, and that's it.
Right, so we'll open it for a few questions from the audience. It's been a fascinating conversation from the man himself, who's at the vanguard of the Indian economy. So a few questions, and then I think Sir has to push off for another meeting. So right there, first question. Yeah.
First of all, great achievements. I mean, since you've been at the helm, all investors, I represent a investment company out of Dubai, and we're a foreign investor into India. And we have a very high regard for what the Central Bank of India has achieved being investing globally. I want to ask you, over the last decade, interest rates globally were very low and gave a great opportunity for a country like India, which requires long-term capital, to raise capital at very low rates. For example, take a 30-year bond or sovereign bond. What prevented India from not raising large amounts of capital? And many countries, who were continuously raising capital.